All right, Bulls, here's the video portion of part 2 of this week's game plan. Put into action the institutional Wednesday being the trading day that we prefer. The Dow is outperforming, so buy the pullback. That means buy Starbucks, buy McDonald's, buy Caterpillar, and I put that there 3 times because I'm still amazed at what a good swing trade this is setting up to be, and already is being. And then the perfect entry for XOM as well as these other stocks too. I added XOM on there. That was another reason I made the video and wanted to get it out as quick as I can. So we've already covered that we want to trade on Wednesdays instead of Tuesdays now. In the news, you guys can read this for yourself because you're subscribers, but I also want to put in there kind of some reasons for what we're doing here. All I do is kind of go through the capitulations of sectors. So tech sector has been the highest performing for this last year, in the last 6 months, and then the last 3 months, and then the last month, and now it's on the bottom of that. And the highest performing sector is like the industrials, materials, and consumer staples is actually the very top, which is also the most defensive, if not the second or third most defensive sector that there is. So kind of go in there. There's some interesting article pieces here. I think that JP Morgan and Chase both being in debt and having their customers, clients not pay that back to the tune of $3.5 billion really tells us where the market is, and not the market rather, but where the economy is. There are 2 different things. Somebody should tell our elected officials that. And just some other neat kind of stuff. We'll hear about ARK, but everything's bearish right now. But the reason I have this hypothesis, and we're going to see it here, is that these weeks are going to come along every couple months. So let's say like every 5 or 6 weeks, we're going to be having these complete flipped over sector performances, and then it'll flip back because the government will go to any measure to make us fat and happy before an election. This is the fourth one I've been through as far as trading presidential elections, and the amount of research I've been doing on this is crazy. But that's where the confidence is coming from. Not like you guys need it, but yeah, Caterpillar, McDonald's, that easy. To think like a portfolio manager, just kind of keep remembering this. So next year I'll make a video roughly the same time, maybe a little bit earlier, or just repost this one. But check out, just checking out these sectors. I think this is interesting. 90% of the consumer staples stocks are up. This was yesterday, and only 9% of them were down. Energy-wise, 88% of the stocks were up, 12% down. Utilities, real estate, materials, and this is just literally like a list of the sectors in order that do well in poor economies. And from the bottom up, it's the same thing, right? Information technology and consumer communication services have been at the top since I restarted the company in February. Check it out, 6 months, information technology, communication services. 1 year, consumer services, information technology, 41%. So what we're doing by moving these swing trades over is we're just saying, hey, this is an opportunity to not have to play ball with the more risky, but the more high rewarding stuff, and get the high reward with less risk. That's really all there is to it. Yeah, thanks for being a subscriber. We're looking for high revenue growth companies, not necessarily high stock price growth companies. So we're not looking for market cap growth. We're looking for revenue growth. And AFG, LFG, LGR. Let's get rich.